Good evening, future Maryland homebuyers. Thank you so much for being here. My name is Kelly Crum, Brand and Content Manager for Maryland Realtors. I want to welcome you all to your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us is our very own Director of Advocacy and Public Policy, Lisa May, Frank Bamunde and Catherine Kramer Dale from Maryland Housing and Community Development, Jim Hall with Freddie Mac, and of course, our local realtor, Rakia Reed, and our lender, Miller with HMA Mortgage. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and sent out to all attendees after the conclusion. We encourage your questions and we look forward to answering them. Please post all your questions in the Q&A box below at the bottom of your Zoom screen. With that, I will turn it over to Lisa. Lisa, take it away.
Kelly, thank you. And thank you so much, everyone, for being here with us. This is a really busy holiday season, so it means so much that you are taking the time out of all of those last minute errands and shopping and holiday parties to advance your goal of becoming a homeowner in Maryland. Now, the weather outside, as they say, may be frightful, but buying a home doesn't have to be because as a Maryland resident, you have a ton of resources at your disposal. You have wonderful information, wonderful programs, and wonderful people, including those who are here tonight, that are going to help you and support you every step of the way in your home buying journey. So let's get started with that. And our first presenter tonight is Rakia Reed. She is a realtor with Visionary Investment Properties in Annapolis. She's also very familiar with Prince George's County. And fun fact, she was named a Rising Star Award winner. So I know that she's going to have a ton of information for you tonight. So with that, Rakia, please take it away and let's talk about what it means to work with a realtor in your home buying process.
Okay, good evening. Give me just a second to pull up my screen for you. Okay, that is correctly. Okay, let's get started. Okay, good evening, everyone. As Lisa stated, my name is Rakia Reed. I'm the broker owner of Visionary Investment Partners Realty in Annapolis. My goal here this evening is to walk you through the process of buying a home in the state of Maryland. It's not going to be very high level because I feel like the individual goal is different. And when you sit down and have your consultation, your realtor professional walks you through each step that you need because everyone is at a different step when they start their journey. Um, when you choose a realtor is actually someone who's going to educate you in the process. They're going to advocate for you. They're going to, be your therapist. They're going to hold your hand. They're going to be there every step of the way. So when you're considering, where you want to start in your journey, everyone always thinks they need to go to the lender first. But your first step is actually to interview realtor professionals because when you sit with professionals, they have a team for you. They introduce you to their network and they have every resource that you need. So when considering buying, make sure you interview about 2 to 3 realtor professionals. Ask them questions like how long have you been licensed? What areas do you service? Um, Ask them about how long the process, their contract to close rate, just things that make you feel comfortable in this process. And also ask them what type of personality they have, right? Because if you're a buyer who needs their hand held from the very beginning, you do not want to work with an agent who's going to be not going to answer every question you have, not going to be very responsive to emails. That's just not going to work for you. So your first step is to consider what type of buyer you are. And when you interview realtor professionals, you keep that in mind. And once you choose your realtor, that is when they will have a buyer consultation with you. Each buyer consultation it's unique. So they're going to sit down, they're going to look at your credit. They're going to ask you some very low questions because they're not the financial lender. They just want to see what step you are because some consultations allow you they may allow you to go to a credit repair person or straight to the lender. So that's the purpose of a buyer consultation. And it's usually two buyer consultations because your pre-buyer consultation is when you sit down and say, "Hey, I'm thinking about buying a house." And you talk with your realtor and you decide whether or not are you ready now? Do I need credit repair? Do I need to clean some things up? Do I need to save? That's your pre-buyer consultation moment. Once you're ready, so if you're credit ready, you get sent to a lender. And if you work, your realtor professional will give you about 2 to 3 lenders that you can work with. You can also work with, your bank, your credit union, or whomever, but your realtor will have that resource for you. Um, you get pre-approved, you get your financing, you talk about numbers with your lender, and once you get all the pretty packaging with your lender, you come back to us. And then that's when we have our second consultation. The second consultation is when we sit down and say, okay, this is what you're approved for, but what are you comfortable spending every month? And we will go into the MLS system. That's our multiple listing service, where we pull up properties based on your geographic location. So in Maryland, if you want to look in Prince George's County, if you want to look in Anne Arundel County, we'll sit down and say, hey, here's the price point. Here's what you can afford in this county, and here's what you can afford in this county, right? And it's going to be different because taxes fluctuate. Prince George's County has a higher tax rate than Anne Arundel County. So just having a consultation to know where is your money going to best be spent within the state. Um, we'll narrow down the type of house you want. If you want a condo, if you want a single family, just just see what you are able to afford within your price point and what your desirability. And then once we have a list of homes, we will schedule a tour of homes, and you're also welcome to go out into open houses within your area to take a peek. But your realtor will also set up searches for you and set up tours for you so you can visit the homes, see what you like about the homes. Before and after you start looking at homes, I would say make a list of what's important. Make a list of 10 things you need in your home, and 5 of those things being non-negotiables. So if you know you want a home built in the 2000s and modern kitchen, stainless steel appliances, basement, things of that sort. Make that list highest ranking. So when you're looking at homes with your realtor, you know exactly like, hey, this is not going to work for me. I want a modern kitchen. This is not going to work for me. It's a little bit older. I don't have enough money saved up. So this is going to be a deferred maintenance that I'm not going to be able to afford. That's something that you're going to have to consider as well. Once you find a home, you're going to make an offer. See why I say it's not going to be high level because I'm running out of time already. And once you make your offer, your realtor will help you navigate the process as far as, hey, what price point do I feel comfortable offering? They will consider what comps are in the area. And comps are just a list of properties in the area, how much they're being sold for, how much they've been sold for in the last 180 days. Um, Not an appraisal because we're not appraisers, but just pretty much what the market is, the testing of the market. When your offer is accepted, you have a period where you have contingencies. That's when you go back to your lender, saying, "Hey, I found a house. I'm on a contract. What's the next step?" So we'll send you right back to them to get your financing completed. But at the same time, you also have what's called an inspection and appraisal contingency, right? So you have about 5 to 10 days to get in the house to get an inspection. And I will always say this: I know sometimes the market is very competitive, but do not buy a home without getting an inspection. Um, it's not advised because it looks pretty on the outside, but the inspector's job is to find out what's wrong with the house. And you want to be a well-versed buyer because if you don't have a lot of money saved up, buying a home that's going to need a roof replacement in the next year is not going to be beneficial to you. So that's why you get an inspection to see how much time you have left on the roof, on your appliances, and things of that sort. And of course, the appraisal, that's going to be the pretty bow. I know say you offered X on a property, but it came back $5,000 less, right? That's going to be a period where you go back to the seller and say, "Hey, I know I offered X for this property, but it came back at this price. Are we willing to negotiate?" They sometimes say yes, they sometimes say no. But at that point, that's a contingency where you're able to negotiate whether or not you can move forward with the property. And FYI, the bank is not going to pay more for the house than it's appraised for. So if you're going to come out of your pocket, that's just something that you would have to consider with your lender professional. And then we finally get to closing day. I know I didn't give any dates of how long each process takes because, like I said in the beginning, each process is each buyer or each buyer journey is different. So some can close. I've seen a buyer who had a clear to close in 14 days. It was a very rare instance, but it happened. But I've also seen people who had to take 45 days to close. So your journey from consultation to close can be anywhere from 14 to 45 days. It just depends on readiness and preparedness. Um, and once you have a conversation with your realtor professional, you're able to really navigate where you are in the journey and how long it will actually take. And if you're looking to buy, it's like, say, for instance, your lease is up in like 2 months, you know it's about time for you to get started because it can take long or it can take a shorter period of time, but you want to make sure you have enough time in between just in case you need to save some more money, just in case you need to, get some credit points from somewhere. You just want to make sure you have it timed perfectly so you can get the home of your dreams.
Awesome, Rakia. Thank you so much. And for those of you who are listening, please use our Q&A box to enter your questions. You have the experts right here. And I guarantee you, if there's a question that you have thought of, someone else on this webinar is thinking it too, or has in the past. So please feel free to ask questions. Ricky, I wanted to just start by asking, I know that you mentioned that folks should interview more than one realtor, two to three. But there are a whole lot of realtors out there and a lot of different companies, a lot of different locations. How would you recommend someone find those three that they're going to interview? Where should they kind of start looking?
I would say start with your sphere. Like for instance, if you went to college, if you go to church, work, somebody has bought a house before, so they have a resource available to you, right? So check all of those networks that your fraternities, sororities, school, your child's school, you're gonna find one. If you just walk in a grocery store, you might find one too. So there's options, but usually start with a referral and then go out and find your own and see which one fits best for you because not all realtors are one size fit all.
Absolutely, absolutely. And I'm really glad that you did mention, not waiving your home inspections and your appraisal, those important things. There's a lot of folks out there that think this market is so competitive. I have to make the strongest offer I can. And if I put those things in my offer, the seller, won't like it. But that could be a very expensive mistake for a buyer to get into a property that, they don't know exactly what they're getting into.
Correct. So I know from a personal experience, I did what was called a pre-inspection because I purchased my home during COVID, and that's when things were flying off the market. But of course, I used my partnerships to say, "Hey, can you look at this house for me up front?" So I knew what was wrong with it before I was able to, put in the offer. So I was still competitive, but I did not waive my right to make sure the house wasn't in good condition before purchasing it. Always cover yourself because you never know what will happen.
Yeah, great. And we did have a question come in. This is a fantastic question from someone who's really been doing their homework, wanting to know about first-time home buyer savings accounts. And these are something very special that we have here in Maryland, where you can set up a savings account at any bank, the bank that you use now, and you can claim a tax credit on your tax return for the money that you put in there. You do need to use it though for your down payment and closing costs. Anything that's on that settlement sheet is what you use it for. If you use it for something else, you're probably going to pay some tax penalties on it. Rakia, have you had a client who has used a first-time homebuyer savings account or some other way of saving for their down payment and closing costs?
Actually, I haven't had a client use the savings program yet. They have been using the down payment assistance programs. So that's why, making sure you have the right team, the lenders will introduce you to different programs that you may qualify based on, just where you work, the state you work, the city you work. So just having that conversation and see what grants are available based on county, based on you being a nurse or, a doctor. Utilize all those resources, especially if you're a public service. Look at those resources, look at your job and see what they have type of reimbursements. Because I had a client who was able to get reimbursed for her closing costs up to 5%. So just seeing what's in your benefits package, that's also a way to save.
Very good advice. Wonderful. Wonderful. Well, Rakia, thank you. You can stick around with us in case other questions come in. I have one more that I'm actually going to hold for the lender that has come in. So thank you so much,
Thank
for the
you.
wonderful overview of buying a home. And with all of these steps, I think we can all see why it is so important to have someone there guiding you through all of these, especially when the unexpected comes up. So thank you so much, Rakia.
Thank you.
All
How
right.
do I get out of
Next
here?
up is our lender, and that is Mike Miller. He is a senior loan officer with HMA Mortgage based in Owings Mills, but I understand that he is licensed in Maryland, DC, and Virginia. So he has seen it all when it comes to mortgage lending. And we're going to let Mike kick off his presentation on getting approved for that mortgage that's going to put you in your first home. So, Mike, floor is yours.
Thank you. Thank you very much. Let me see. Let me share my screen as well. All right. How's that? Good.
We
Okay.
got it.
So first, I just want to thank everyone for being on this seminar right now. Like it's Christmas time. People are out shopping for Christmas gifts and stuck in traffic even. I think you all are in a great place, and I'm grateful that you're here taking in this information. I'm also grateful, Lisa and the others, for having me on as well. As Lisa said, my name is Mike Miller. I'm with HMA Mortgage. Um, our office happens to be in Owings Mills, but since COVID, no one really goes into the office. I'm located in my basement in Crofton, Maryland. Next slide. I've been in the mortgage industry since 1998. So I don't know, that's probably 27 years and counting. At this point in time, I love what I do. I have a passion for helping people. I have a passion for helping first-time home buyers becoming homeowners and just educating people. Sometimes I find myself on the phone for 30, 45 minutes, just walking and talking new buyers through the process. I am licensed again in Maryland, DC, Virginia, and in Delaware. Delaware is actually new for me. Within the last year, I got licensed in Delaware. So I'm looking to just branch out. I'm having some new connections in Delaware. So it kind of only made sense for me to grab that license as well. I am a father of three daughters. The youngest two are in college, and actually they're home from college now um, for winter break. So we are actually just like spending more time together, catching up on some things, wrapping gifts, and doing that type of. Actually, we just had a final exam this morning too, so we are getting back to our family style now that they're back home from college. And lastly, the last bullet point there, I'm just committed to empowering families with knowledge and confidence so you can go shopping, with that confidence and feeling good about, knowing what your options are when you get out there. So first thing I really want to talk to you about today is our platinum pre-approval process. Typically in the past, when you talk to your lender, you get what's called pre-approved. And once you get pre-approved, you go shopping You find yourself a house, you write an offer on the house. When the offer gets accepted, uh, the next stage would be underwriting, where your loan is reviewed and approved. What we like to do with all of our pre-approvals, once we collect all the documents and the application is complete, we like to submit you to underwriting right now. We want an underwriter to review your documents, review your credit, review your file, and give us an approval while you're shopping. Sometimes you may find a house immediately after getting pre-approved, and we may not have the actual underwritten approval yet. But in most cases, we're going to have that approval in hand even before you write an offer on the property. So when you write an offer on the property, we can actually provide you with a loan commitment instead of just a pre-approval letter. And that just allows you to shop confidently, knowing that there, as long as everything is okay with the house and everything is okay with title, uh, that we already know everything is okay with you and your loan and your qualifications, because it's all been looked at and underwritten already. So that when your offer is accepted, we really have very little to do. We have to get the appraisal ordered, we have to get title work ordered, and typically, once those things come in, step number 6, we are on a faster path to closing. Some of the benefits of the platinum pre-approval: stronger offers. So when you already have your loan approved, and when you already have this commitment prior to writing an offer on a property, when you do write that offer and they do see that you've already gone through the underwriting process, when you're competing with other offers, it kind of gives you a little leverage because you already have the loan approval. Again, since we only have to order the appraisal, since we only need title work, we get faster closings. We get fewer surprises. You may have heard stories about people buying houses and something popped up. I don't know. They were surprised about a tax lien, or maybe something unknown credit issue, or an unknown debt, right? Because all of these things are looked at prior to, and because we already have this platinum pre-approval ahead of time, we have fewer surprises because it's already been vetted. And it boosts the seller's confidence to accept your offer, even if you're competing as well. So it's important. It's an important part of the process. It helps the buyers compete in that competitive market, and it also gives everybody involved, even your realtor, because yes, your realtor is working typically with a lender that they know, that they trust. They trust their word, they trust their process, but there is a level of confidence, a peace of mind, when you already know that you've been underwritten and approved. We do participate in the Maryland Mortgage Program, and we have Maryland Mortgage Program representatives here tonight, so I won't step on their toes, but just as an overview, the state of Maryland does provide programs with down payment and closing costs assistance for first-time and some repeat buyers as well. This complements the platinum pre-approval, just in that not only are you approved and underwritten ahead of time and can go to closing faster, but also what better process to have and to be part of a program that can help you with your down payment and closing costs as well. Another program I want to touch on this evening is the renovation loans. What's really cool about HMA is that we do really good with renovation loans. We have a renovation department. So I've been doing this 27 years now. And I've been with some companies where, the renovation loan isn't an everyday loan. And when you get one occasionally, it's almost like no one knows what to do with it. Sometimes your processor, is not used to the documents and not used to the process and what to look for etc. We have a renovation department. So my processor, who normally processes my loan, doesn't touch my renovation loans. It goes directly to a renovation processor and a renovation underwriter. So that process is a lot smoother, because the people who are involved only process renovation loans, and that's what they specialize in. There are several types. FHA has a 203K. The conventional loan has a home style. VA has renovation loans as well. So finance your home, get some updates. And, a perfect scenario is when you're out shopping and, a lot of times, a lot of these very nice houses that show well, guess what? You fell in love with it. Someone else did too. But not everyone falls in love with some of the less desirable, less updated houses. And what a scenario that you can, find a house for 400,000, for example, and once you put in, let's say, 100,000 worth of renovations, you get the new kitchen, the new bathroom, the new roof, the new HVAC, and all the things that you want, and it's still worth the 500, and it's done how you want it to be done, and it's all financed in your regular mortgage. So some of the benefits of dedicated renovation department, as I spoke about, we have a dedicated processor team, dedicated underwriting team. All they do is underwrite and process renovations. So they're specialized specifically for that. Contractors as well. It's important to hire a contractor when you're doing these renovation loans that are used to the 203K or the renovation um, process, because they really need to know about them. They need to be able to withstand doing some of the work ahead of time and getting paid once the inspections and once the draws are cut. Typically, when you're dealing with when you hire a contractor, they want a deposit up front. Doesn't work that way with renovations. And obviously, if this is something that you're interested in, we can dive much further into it. But I think it's a really cool uh, lane to be in this competitive market, especially when if you have houses that need some repair and you don't have that cash up front. Credit is a big thing with buying a house, getting pre-approved for a mortgage. It's one of the main components of getting pre-approved. And there are a lot of, credit issues and uh, credit obstacles that can get in the way. One thing that we do, we have a credit simulator. And what a credit simulator is it's a tool that models credit score outcomes. So for example, let's say you have a 600 credit score. And let's say in order for us to participate in the Maryland mortgage program, we may need a 640 for a particular program. Well, our credit simulator can suggest things that we can do or you can do to your credit. It may be paying down a credit card balance or paying off an account, but it will give us instructions on what needs to be done. It quickly identifies exactly, even to the dollar, what you should be paying down a credit card balance to result in the credit score, hopefully, that we're looking for. So the credit simulator is very good. And once you pay those balances down, or once you do follow the instructions, then we have what's called a rapid rescore. So we don't wait on your credit to naturally adjust, update. We take, once we know that the payment has posted on the account that you paid, for example, we'll get an updated statement, or we'll get a letter on the creditor's letterhead saying what your balance is. We send that over to our credit reporting agency, and they give us an updated score within to 5 business days. So the rapid rescore is really useful, especially when you are ready to buy a house. You want to get this house. What do I have to do? I want to get my credit score to where it needs to be. The credit simulator will give us the instructions, and the rapid rescore will will make the adjustments to your credit report within just a few days' time. So the next steps: just apply now, gather documents, explore down payment assistance, consider renovation or credit planning, and get platinum pre-approved. That's my QR code. That QR code, if you scan your camera on it, will take you to my application link. Um, I'll get right back to it. This is just my information as well, but that QR code will take you to my application link. But if you want to contact me directly, please feel free to do so. That's my cell, that's my email, and I'm open to all questions. And again, I am thankful for you all being on and having me on this evening. Thank you.
Mike, thank you. And I didn't mean to diss Delaware there. At least not when it comes to mortgages. I will call them out when they try to claim the Orange Crush as their state drink, not ours. But no. So four states that Mike's works in. We had a question come in about credit, and Rakia mentioned credit. You just went in depth on credit. Um, if it turns out that you do need, real true credit repair, we do, of course, recommend that you find someone reputable. It shouldn't be someone that charges you a whole lot of money to fix your credit. So check out the State Department of Housing website, and even some of your county websites will have information on finding vetted, credit repair and credit counselors. But Mike, you mentioned, that your lender can even just look at making those small tweaks. Like if you pay off this account, you might get a 5 point bump versus that account where you get a 20 or, something else. But Mike, there's also things that you absolutely should not do while you are shopping for a home. Do you want to talk about some of those things that you should not do to your credit while you are shopping for a home?
Sure. So just to go back just for a quick second, um, I feel like I say this daily. If I don't say it every day, I say it 3 or 4 times a week. I don't care if you've never had a late payment on your credit report. If your credit card balances are near their max or they're maxed out, your credit score will be lower. So, in any scenario, if we just keep our credit card balances low, we're going to naturally see higher scores. So, in general, if you're looking to increase your credit scores, that is probably the first thing, that is probably the most valuable thing you can do. But while you're buying a house, do not pay off collections, actually. Don't go out and purchase things on credit. Actually, don't purchase things that's going to impact your ability to put down your down payment. Like we want to save those purchases until after closing. Um, don't even go out and inquire about purchasing things. Don't have anyone else pull your credit. I don't care if it's for a car. I don't care if it's for a student loan. Literally, we want to save all of that. We want to freeze all of that until not just loan approval, but closing. So those are the main things. Just don't not even pay your parking ticket. Like we don't want anything to even pop up on the credit report that could be a negative impact on this process.
Got it. Good advice. Now, I think we can't leave today without talking about interest rates. Everyone's been talking about interest rates, for the past year. Should I wait until interest rates come down to try to get a better deal on my mortgage? What's your advice for people who are kind of looking at those interest rates, remembering the days where we had 3 and 4%? What advice would you give to someone who's looking in today's mortgage market about those rates?
Yeah, well, two things. I've been getting a lot of calls this week because people who have been like riding the fence, they heard that the Feds cut their rates and they did. Yet we see no impact to the interest rates. The interest rates today was what they were a week ago, even though the Feds cut the rates. And what happens is we see that the rates gradually get better over the last few weeks, several weeks, a couple months in anticipation of the Feds cutting the rates. So when they actually cut the rates, we're already there. They've already been adjusted in anticipation of the rate cut. So that's one thing. So don't think, oh, I heard the Feds cut the rates, that the rates are all lower now from where they were last week. But to answer your question initially, I think it's always a great time. And the reason why is because if you wait until the rates get low and then you go out and get that house, at that point that house might run you 30, 40, $50,000 more in cost or even more, right? Because of appreciation, because of the market. Because if people are continuing to buy houses, that house that you wanted for 400,000 is probably 440 in a couple years. And you would much rather have bought the house for 400 at a slightly higher interest rate than you would for 440 at a lower rate because of the equity that you just automatically lose in waiting. So you can always refinance and you can always take advantage of lower rates when they come, but you'll never get that equity back that you lost. So that's what I have to say about the rates.
No, it's a great and very good lesson. It's the interest rates, it's the price of the home, and it's where you are and whether you are ready to buy, not when everyone else is thinking, hey, now's the time that it is the right time to buy. It's when it's the right time to buy for you.
That's correct. Yeah, it's when you're ready. Yeah.
All right. Well, Mike, thank you. He's
Thank
going to
you.
hang around.
I
Rakia is
will.
still here. So please feel free to keep throwing us questions and we'll keep answering them. But up next, I have someone who going to continue with our little theme of credit and being ready to buy. We're going to turn it over to Jim Hall, who is with Freddie Mac, who has some amazing tools that you can use to get ready to buy that home. So, Jim, you are on.
All right. Well, thank you, Lisa. And I always have to commend you and Maryland Realtors for providing this service to residents in Maryland because this is a great tool and a great educational experience for people to learn the home buying process and the mortgage application process. And, you know, I'm an old timer. I've been in this industry since 1986. I got Mike beat. And don't be afraid of these interest rates in the sixes. When I got into the industry, I was selling interest rates at 13, 14, 15% on mortgages. So to me, a 6% rate is still affordable. And don't let that deter you from getting into the home buying market. And also my wife and I, we bought our first house in 1990. So this you know this resource that Maryland Realtors is providing to you is fantastic. You get to hear from subject matter experts in your area who can, help you through this process. So to give you a little background on Freddie Mac, okay. Again, I'm Jim Hall. I'm a senior affordable lending manager here, and I've been with Freddie Mac for almost 8 years now. And Freddie Mac is a mortgage company, but we're not in competition with Mike and other mortgage companies. Okay, we don't lend directly to consumers like yourselves. We're what's called the secondary mortgage market. So we create mortgage programs like our standard conventional programs and Home Possible and Home One, and also the HFA Advantage program, which the Maryland Mortgage Program uses to give you, the consumer opportunities to have choices out there in the marketplace. So then when the lenders make the mortgages, ultimately what they do, they sell them to companies like Freddie Mac, and then we purchase the mortgages to keep the liquidity going in the home buying and the mortgage markets. So it just gives you a little snapshot on, what Freddie Mac does and who we are and what we do. But one of our main business pillars here at Freddie Mac is education. And it fits right into, what Lisa and the Maryland Realtors is providing to you. Okay. We realize that, financial education really isn't taught in the high schools and colleges anymore. So it's important for, realtor professionals and mortgage professionals, for us to be, your fiduciaries, your trusted advisors to really guide you through this process. So Freddie Mac created an educational tool for you, the consumer, called Credit Smart. And Lisa and Maryland Realtors will be sending you a copy of these slides after this webinar. So you'll have all this information that I have up here on the screen. So you'll be able to access the Freddie Mac Credit Smart website, and the address is in the bottom right-hand corner of this slide here. But this is a free program for you. It can be done at your leisure, on your laptop or your computer. And what it will help you do is, essentially go through the entire process of buying the home and then going through the mortgage application process. So we did a major overhaul to it. It's been around for over 20 years, and we really made it, more attractive from a tech standpoint, to make it more interactive for you. There's videos, there's quizzes, and so forth. It's, there's start, pause, and resume functionality. So it's something that you don't do just in one setting. We broke it into different areas: one, the financial capability area, and then one, the home ownership education area. Now, as far as, you personalizing it, you can set up your own dashboard. You can track your progress, earn badges, keep a notebook, set goals, and also, it will really be something that you can keep for your whole home ownership journey. And the essentials part is the part that you keep through that journey. This isn't just for the immediate. As you can see, there are the topic areas that you can access and learn about, and there's multiple modules in the specific areas. So really, it's important to set goals. You're on this call today, so one goal you have is to explore the opportunity of becoming a homeowner. So again, setting goals are important in all aspects of life, especially in the financial part of your life. It's important to know, how much money you earn and how you spend it, how you track it, and how you control it. And Credit Smart will help you through that process also. Our two subject matter experts that spoke before me talked about the importance of credit, and that is covered also in Credit Smart. So, we'll give you tips on how to build your credit, how to eliminate debt, how to borrow smart, and really maintain your credit score, because it's very, very important that you keep your credit rating good, because not only are you purchasing a house, but not in the immediate future, but maybe 5, 10 years down the road, you're going to be buying cars, maybe getting a credit card, maybe a home equity loan, and you're going to have to maintain your credit to be able to achieve, those goals also. Also, it's very, very important to plan to save. And, what we find out is that, a lot of people don't have a lot of liquidity, a lot of money in the bank. And I always harken back to when, I purchased my first home. My father, he said, Jim, he said, you're going to need a rainy day fund if you're going to be a homeowner. And I had no idea what he was talking about. I said, well, Dad, what's a rainy day fund? He said, well, have a separate savings account where if something happens, an emergency happens at the house, that you can access quick cash to take care of your problem. And I was like, okay, sounds good. I said, maybe, You just don't want me to come back to you and ask you for a little money if these emergencies happen. But that wasn't the case. And he was almost like a prophet, because 2 years into our home ownership, my wife and I, we came home from work that night, and we found a flood in our basement. Our water heater failed, and our basement was about 80% complete. The rugs were ruined. I needed some quick cash to get that mess cleared up. I listened to Dad, and I had that money there, and I was able to take care of it. So again, these are just things you don't think about when you're not a homeowner, but it's important that you realize that becoming a homeowner just isn't buying the house and getting your mortgage. There's a lot more to it. And again, preparing and protect is the last area that we focus on here. And this is extremely important also, because you're making probably the biggest financial decision you're going to make in your lives by buying that house. And there's a lot of excitement in it, becoming that homeowner and getting in there. But we want you to understand the importance of making that monthly mortgage payment. And that's protecting your asset. And by doing that, ultimately, you're going to gain equity in that property. You're going to pay down your mortgage balance. Hopefully, your value is going to go up, and you're going to gain wealth by being a homeowner. And then ultimately, you're protecting that asset. And then through the years, when you build your estate, you can hopefully pass down that asset to your heirs, and they'll remember you fondly for that. Okay, so with that, we also have the home buyer use side. Now, that is for the immediate portion of this. And this is when you're working with your realtor and working with your loan originator. And this is only 6 modules. And Homebuyer U meets national industry standards for homeownership, education, and counseling. And those 6 modules are basically mirror what I just went over on the essentials side. And once you go through all those 6 modules, it shouldn't take you more than 2 to 3 hours to complete Homebuyer U. And when you get to the end, you have to pass a test, and you have to achieve 80% or higher. And once you do that, you get a completion certificate. You get a diploma, again, that meets national industry standards for homeownership education. And it's good for a year. So if I'm your loan originator, or if I'm your realtor, and I see that you put the time in and you went through this and you got your certificate, I know you're serious. And it's either my job as a realtor to find the right home that meets your needs, or if I'm a loan originator, I have to find the mortgage that is most affordable for you that you can qualify for. So again, Credit Smart doesn't cost you a dime. It's free. It's a bonus for you for tuning in tonight, because you get to walk away with not only important information that you've learned already, but you'll get this important educational tool. So with that, I am done my presentation. And Lisa, any questions or?
Let me take a look. So if someone doesn't get the homebuyer certificate, but they think their credit score is enough, is that taken into consideration, or do you still need that homebuyer education to qualify for certain programs?
Well, it depends on the certain programs. And, for the Freddie Mac program that the Maryland Mortgage Program provides, you would need it for that. I would invite Mike to come back in and talk about, the mortgage products that he provides, and if there's any educational requirements attached to them. So, Mike, do you have any comments on that?
Yeah, so of course, the down payment assistance will require that education and that certificate. But there are other products, like if you're going to go with the conventional loan, 3% down, that would be the Home Possible, for example. Yeah, they require education. The exact same education that you're speaking of is the same education that we send to our clients to complete. So I'm very familiar, with at least sharing the link for your education, and but yes, they still need it regardless of the credit score. The credit score is great. The credit score gets you in the door, but the education is one of the eligibility requirements to participate in some of these products and programs. So you need both. You need the credit and you need the education in most cases. In most cases, for the assistance or the low down payment products, you don't need the education, or should I say, it isn't required if you are, just doing your traditional financing, putting down your normal amount, which is might be 3.5%, 5%, 20%. But typically, when there's 3%, typically when there's down payment assistance involved, the education is required.
Okay. So the loan originator will guide you through that process and let you know what specific loan program that you're going for and if it requires the education. But we recommend it for everyone because it's, knowledge is power. And from a consumer standpoint, the more you know, the better dialogue you can have with your realtor and your loan originator.
Absolutely. Well, Jim, thank you. I mean, a free program that you can do from home in your pajamas and it might put money in your pocket. That's the kind of holiday deal I'm looking for right now. And I hope everyone else will agree. It can really pay off for you. So thank you so much, Jim, for sharing Credit Smart and Homebuyer U with us. And as you mentioned, we will certainly be sending out those links so that all of you can explore those programs over our Christmas holiday here. So, Jim, thank you so much. All right, we're going to hand it over to our final presenters, Catherine Kramer Dale and Frank Monday from Maryland DHCD and the Maryland Mortgage Program, who are going to talk about mortgage products that can give you money. They're fantastic. So, Catherine, please tell us about the wonderful options that you have for potential Maryland home buyers.
Yes, let me pull this up. Okay. My name is Catherine Kramer Dale, and I am with the State of Maryland Department of Housing with the Maryland Mortgage Program. We are a state agency. So you've had an opportunity to hear from a realtor with the Maryland Association of Realtors, one of our top performing lenders, Mike from HMA, and then Jim Hall from Freddie Mac, which we are very strong partners with. We are a state agency. You do not apply with us directly. What we do is we educate all of the lenders that are approved with us in the state of Maryland, and you have an outstanding lender on this call, Mike, and you actually apply with the lender. The lender is going to make sure that you are meeting agency guidelines. I might be talking a little lingo here, but it's FHA, VA, USDA, or conventional loans. They're going to ask for your credit and your pay stubs and your bank accounts, etc. Tax returns, 222, right? 2 pay stubs, 2 bank statements, 2-year tax returns, and they're going to pull your credit. They're going to determine that you qualify and how much you qualify. You heard the word pre-approval? Well, if they think you need money or assistance to help you purchase your home, that's where the State of Maryland Department of Housing comes into play. We offer down payment and or closing cost assistance. This is our website. It's www.mmp, Maryland Mortgage Program, at Maryland, MARYLAND.gov. This is what our website looks like. It's open to anyone, so you can get on this website. You're going to go over to, well, actually, you don't even have to. You can literally scroll down on the first page and you can click on Talk to a Lender. When you click on that, it's going to ask you your name, a good phone number for somebody to contact you, a good email address, what types of property you're looking for, what area are you looking to purchase within the entire state of Maryland. We lend the money or the lender gets the money to help you purchase your home, and you use down payment and closing cost assistance. Now, as I said, Mike's on this call and he's one of our top performing lenders. That's why we wanted to make sure he was in attendance. This is the website. You're going to go to the rate sheets. When Mike determines that you meet our guidelines, where are you a first-time home buyer or not? We have household income limits, and believe me, they're very, very generous. This is not for low to moderate income. We have asset restrictions because, hey, if you got a lot of money in the bank, liquid assets, why are you coming to the state to borrow money? Home buyer education, we've heard that throughout this whole call. Home buyer education is extremely important. It lets you know, are we ready to purchase a home? Or maybe we are not right at this time, but it's a goal that we can set. And then we have our DTI, which stands for debt to income ratio, and we have a credit score. The credit score, just to go let you know, the minimum credit score to do the Maryland mortgage program is 640. If you're not there yet, Mike and his team can help you get there. And he gave you some insight on what to do, what not to do. He's going to help you. If he determines that you meet our 6 guidelines, he's going to come to this rate sheet. And we offer several products. You cannot own, be on a title, have any interest in any property anywhere in the world at the time of this closing. This property that you're interested in purchasing has to be your first time, your primary residence. You can't own anything anywhere else in the world at the time of this closing. So if you own something, you have to sell it. If you're on a deed, you have to quitclaim your name off the deed. You don't own anything, you don't have any interest in any property anywhere in the world at the time of this closing. You're going to apply for a mortgage, you want to buy a house, and your loan officer says, I think the Maryland Mortgage Program would be a great benefit to you. It's going to provide you down payment and closing cost assistance. We have several products. If you are not a first-time home buyer, you still can't own anything. But if you're not a first-time home buyer, then we have 3 products. They're called the Flex products. Flex Direct, Flex 6000, or Flex 3%. If the lender can determine that you are a first-time home buyer, then you could slide to our MMP First Time Advantage side. And you have the First Time Advantage Direct, the First Time Advantage 6000, which, hint, you get $6,000 for down payment and closing cost assistance. And then we have products where you get 3% of the total first mortgage, round down, no change. So think about it. If you know what your total first mortgage is, take 3% of that, and that's how much money we're going to allow you to borrow. It's a loan. You don't have to make any payments on it. There's no interest rate on that 3%. These are the rates for your first mortgage. The 3% or the 4% or the 5%, or we even have a 6%. That's money that you don't have an interest rate on, you don't make any payments on it, but you have to pay it back when you sell or refinance. None of our products currently are grants. None of it is free. You have to pay it back when you sell or refi. Then we have products that if you're interested in purchasing in Montgomery County, Maryland, we have a Montgomery County program that is specifically for Montgomery County government employees. Or we have a program where if you're just purchasing in Montgomery County, or we have the Maryland Smart Buy. This program will allow you to help you pay off any student loan debt. And Mike, as well as all of our other amazing lenders, can guide you to see if you have student loan debt. They'll look at the criteria and see if the Maryland Smart Buy can help you buy a home, help you get down payment and closing cost assistance, and then also help you pay off your student loan debt. The State of Maryland Department of Housing has several programs. How am I considered a first-time home buyer? Either A, you've never owned. Obviously, that's a giveaway, right? If you haven't owned or had any interest in the last 3 years, we consider you a first-time home buyer. If you are purchasing a property that shows up on our Maryland Mortgage Program mapper as being in a targeted area, and Mike and his amazing staff, as well as our other lenders, pull this thing called a mapper. They type in the property address and it will tell them if it's in a targeted area, you're automatically considered a first-time home buyer. If it's not, Then they look and see, oh, okay, do they own anything? Never. Have they owned anything but not in the last 3 years? Okay, then they are. The last opportunity is if there are any veterans on this call. If you are a veteran and you are using your VA entitlement, your VA exemption with the Maryland Mortgage Program for the first time, we have a VA exemption form. We'd ask for a copy of your DD 214, and we will consider you a first time home buyer. So a lot of you on this call may think, oh, I'm not a first time home buyer. Well, there are ways that we can consider you to be. Or maybe you're on this call and you truly are a first time home buyer. Think of the Maryland Mortgage Program. If you're purchasing in the state of Maryland, anywhere in the state, do not pass up the opportunity to see if you qualify for the Maryland Mortgage Program. We have helped borrowers that never thought that they could achieve the dream of owning their own home because they had good credit, they had the ability to pay their rent, but they just didn't save up enough money for down payment and closing costs. And that's where the state of Maryland, through the Maryland Mortgage Program, will assist you. So don't think that you don't qualify. Get in touch with Mike, go on our website, click on there, talk to a lender. They will determine if you are eligible according to those 6 guidelines, and they'll let you know, okay, yay, you're eligible. You can't own anything anywhere in the world at the time of this closing. This has to be your primary residence, but you have an opportunity to utilize funds that the state of Maryland offers you. I usually am the last, and I usually don't have a whole lot of time to talk, but always feel free to reach out to the Maryland Association of Realtors. If you'd like for us to do a training, we are more than happy. We do these presentations once a month. I work with the lenders all day and every day, making sure that they know all the programs that we have as a state agency and how you can qualify to take advantage of the Maryland Mortgage Program. I want to wish you the best of luck on your journey. As Mike mentioned, and also Lisa, it's Christmas time or the holiday season, and you have made a point to be in attendance of this presentation. So you're on the right path. Take a deep breath. It's actually the most amazing experience that you'll ever have. And congratulations on purchasing your home in the state of Maryland. Thank you so much and have a great evening.
Catherine, thank you. Aren't those loan programs just incredible?
They're
There are
amazing.
folks from other states that say Maryland will pay off your student loans and give you
Yeah.
a mortgage at the same time. It's
Yeah.
wonderful
Yes.
and great that they are available to all of you. I did have two last minute questions. We are at 7:32, so I don't want to take up a lot of time here. But Mike, if you had a minute, we did have a question come in about refinancing. And when you know it is time to refinance, and I'm sure the answer is it depends, but what factors should people be taking into account if to know whether refinancing is right for them?
Well, the first qualification, I guess, of refinancing would be to benefit you. Um, when you refinance, you should be benefiting somehow, some way, whether it's lowering your mortgage payment monthly. Sometimes actually you can refinance and increase your mortgage payment. But when that happens, hopefully you're like paying off other debts. Like, I don't know, you could have $2,000 a month in other debts. And if you have enough equity in your house, you can pull some of that equity off to pay off all those debts and actually increase your mortgage payment by, let's say, $500 a month. But you'll be eliminating $2,000 a month in other obligations where you could save $1,500 a month overall. That is a benefit in a way. So, it has to benefit you. Obviously, if you're doing it to lower your interest rate, typically you want to lower your interest rate at least 1%. Like if you're at a 7.25% interest rate, you want to refinance, I would say at least to 6.25 or better, to see a benefit there in your monthly payment. But I would think that typically, what is your benefit? What is it? What everybody's benefit is different. Some people say, well, I have to save $200 a month or I'm not going to refinance. Uh, some people's some people's threshold is higher. Some people say, well, I won't refinance unless I'm saving $400 or $500 a month. It really depends, but it must be a benefit.
Got it. And then in terms of credit card balances, how do you handle someone who pays off their balance every month? How's that reflected? What kind of consideration is given in the lending process for that situation?
I'll just say that that person typically, before I even start scrolling down the credit report, I already know who that person is because their credit score reflects that. Typically, when you're and I don't want to say you're abusing your credit card when it's maxed out, but the credit bureaus look at it that way, and your score reflects that. And also, when you're paying those balances off every month, your score reflects that. So I hope that helps answer that question.
Yeah, absolutely. All right. Well, we're just 5 minutes over, but I think we went through a whole lot of
It was
really,
worth
really
it.
good information here this evening. I hope that all of you feel empowered to take that next step in your home ownership journey, whatever that may be, and whenever that time might commence. But when you do, you have realtors like Rakia, you have lenders like Mike, you have Freddie Mac and Jim, and you have the wonderful team at DHCD, Catherine and Frank, who are going to be there to help provide that support and those resources that you need. So thank you again. Have a warm, safe, blessed holiday season, and we wish you the best on becoming a homeowner in 2026. So thank you all so much. Have a wonderful, wonderful evening.
Thanks,
Bye, everyone.
everybody. See y'all later.
Happy holidays, everyone. Bye bye.